We have absolutely no idea. Cern and I, we don't have a clue as to whether anybody's going to care about this particular program, but we hope so. It's going to be really, really illuminating. I am going to learn a ton. And it's kind of, maybe some of you who've been watching the program for a long time will remember back to the early days of Brian Wong and I. And the entire program was Brian instructing me and me asking him really stupid questions. So maybe that's going to be a little bit about what we're going to do today. We're going to be talking about preferred securities.
Preferred securities, the
Preferred,
exciting market of preferred securities. And
yeah,
I predict, Randy, this actually may be your best show of all time.
of all time. All
Yes,
right. Okay.
if you give it enough time.
Well, people just have to hang in there for more than a minute and
Yeah.
see what preferred. I bet you a bunch of them don't know what a preferred security is.
If there's anybody out there that's interested in earning income from their investments, then they should pay attention to this discussion.
Earning income from their investments rather
Yeah,
than having to sit there not doing anything.
right.
Okay.
Growth is great. Growth is great. Growth is awesome, but income has its place for many people. It's important. Some people need income from the investment. Some people are required to take required minimum distributions from their accounts,
Right. I do
IRAs, etc.
100%. Yeah.
This may be one way to fund those. There's just all kinds of different reasons that you might want income,
Got it.
even just to balance out a growth portfolio too. It makes a lot of sense.
Yeah. Income is good.
Yeah.
Yeah. I mean, you might need food, pay the rent,
Food's optional.
or if you're, getting a decent income, which I think most of the people listening are, it might be another cruise, or another
See?
trip someplace. Yeah. Some fancy vacation.
Yep.
All right.
And even if you don't need the income, you can always reinvest it and just have a compound,
Just have a compound. Yeah.
right? Nothing wrong with that.
Way, way more to leave to the grandbabies.
Yeah.
Yeah. Or to your favorite charity.
Yeah.
Yeah. All right. Okay. Well, let's dig in and
Well,
maybe
before we do,
start. Huh?
let me ask you this
Yeah.
key
Okay.
question.
Okay. Question. Okay.
If you were to invest in an investment that paid income, what would be an attractive rate for you? What would be a good rate of return
I
as an
think
income investment?
I'm gonna say that most people, I mean, I'm not, I could say for myself, except that I really have never, ever in my entire life looked at my savings in terms of how much income I was going to get from it. It's always
Yeah.
been about growth. I'm a builder. That's just that's where I live. But I think most people think anything over 5% is good, 10% is great. Anything over 10% is like, how you're probably lying to me. You're probably giving me a story to get me to do something I shouldn't do.
Okay, that's interesting. How many income oriented investments today yield more than 10%?
You mean guaranteed or
Just current yield.
current yield? Yeah, not many.
Yeah.
I can remember I diddled in the insurance business. Well, I had clients who were in the insurance business, and I also was almost an insurance agent back when I was in college. And back then, we were saying that you would guaranteed 8% on your whole life insurance policy.
Yeah. It's interesting, isn't it? Because 10% is kind of a threshold, and yet there's not many
Right.
income producing investments that yield that. And if they do, you're probably suspect of them,
That's right. That's right. Yes.
right?
Yes.
If there's a stock that yields, 8 or 10%, you're probably like, well, they'll probably cut the dividend next month, next quarter. So yeah, okay.
Yep.
Well, the good news is there are some new income oriented investments out there, and we're going to talk about them today.
Okay.
And let me just show you the chart of the yields. All four of these securities have been issued this year.
Okay.
Okay, and this is a chart that shows their effective yields at different points in time since they were issued. So the first one that came to market was STRK. That's the ticker symbol. These trade like stocks.
Okay.
So they trade every day, just like Tesla does on the stock exchange.
Sure.
And when it first came to market, it was yielding about 10%.
Hmm.
And you can see that over time the yield went down. The yield went down because the price went up
Right.
because it pays a fixed rate. And we'll get into the details in a minute as to how this all works. But at one point it was yielding just above 6%. And since then it's gone back up a little bit. The price has come down and the yield has gone up.
Right.
It's now yielding over 8%.
Okay.
There was another security that came to market, STRF,
Hmm.
that came to market. Its yield is around 12, and you can see a similar kind of trend, kind of moved down in parallel and then moved
Right.
back up a little bit.
Right.
And then two other more recent ones as well. So we'll get into the details here. So what are these different securities? Well, there's four of them: STRC, STRD, STRF, STRK.
Okay. I
Stretch?
like the RK one.
Yes.
Yeah.
Yeah, that one's going to behave much more like a stock.
Well, it's because of the RK part.
Yes, of course.
Yeah.
Yeah, this is stretch, this is stride, this is strife, and this is strike.
Okay. And I also like Stripe better than Strife.
Yeah, right. Yeah.
Okay.
Okay.
All right.
Now, this is actually a very important chart
Okay.
because it kind of shows the yield on different investments
Okay.
over different time frames. And we in the fixed income world, you sort of look at time in the terms of duration.
Sure.
Basically, how long does it take to get your money back?
Right.
Okay, so a a leverage loan kind of investment that might be yielding 6.5, almost 7% might have a very short duration.
Hmm.
Okay, junk bonds might have a shorter duration, preferred stocks, mortgage-backed securities, long-term treasury bonds. So there's different time periods associated with different investments.
Hmm.
And there's something called, as you know, the yield curve,
Sure.
and it shows the yields over different periods of time. Typically, in a normal environment, the return or the yield on a short-term investment is lower than the yield on a longer-term investment.
Exactly.
But that's not always the case. Sometimes the yield curve inverts and it's the opposite.
And people
Okay.
who my channel, we've talked a lot about the inverted yield curve last year. Yeah.
Yeah. Now, these securities are positioned so that they have a higher yield for a given duration than basically anything else that's out there that's
Okay.
worth investing in.
All right.
Okay. So we'll talk about the details here in a second.
And typically, of course, when you have a higher yield, you generally think higher risk.
Yes.
Okay.
Yes. Not all the time. Now, risk is an interesting word because risk can mean interest rate risk.
Right.
And certainly on this previous chart, you're taking more risk here because the duration's longer. So if interest rates go up,
Hmm.
all things being equal, the price of these securities should come down,
Right.
and vice versa. If interest rates decline,
Mhm.
then the price of these should go up. So that's a form of risk, but it's a reward potentially too if rates go down.
Hmm. Hmm.
Now, there's always the risk too of losing money.
Right.
And one of the things in the fixed income world is this idea of which investment is more senior versus junior. In the event of bankruptcy, which ones get paid off first?
Yeah.
So they've structured this so that STRF is the most senior security, followed by STRC,
Hmm.
STRK, and then STRD.
Hmm.
Okay, so there's a hierarchy of which ones to get paid off first in the event of a bankruptcy.
Got it.
And if you're the equity holder, you're the last in line. Okay?
So in this particular case, you're having, oh, this is just the security issue. This is nothing to do with the interest rate or just which one gets paid off first.
This is just showing the
Okay.
seniority.
Okay.
Yeah. And then also in this chart, it's showing a volatility. So these investments have also been designed to be more volatile,
Hmm.
medium volatile, and then really almost no volatility or very little volatility.
I see.
Okay. I can't say no volatility because
Right.
these do trade on a stock exchange. So there will be the volatility just every day of trading.
Sure.
But this one should be very move within a tighter band than STRK does.
Okay.
Okay. And I'll show you why in a second. Okay. So let's get into the details of each one. Let's start with STRK first. It was the first one that was issued. Okay. The company positions us as structured Bitcoin. Well, what the heck does that mean? For a lot of people, and I would almost hazard to say most people at this point, think of Bitcoin as a super high risk investment.
Right.
And yes, historically it's been tremendously volatile. This investment is a way to get some upside exposure indirectly to Bitcoin, but while earning a nice level of income along the way.
Okay.
So they think that that's appealing to many investors who, you know, they're curious about Bitcoin. They want to maybe want to invest some, but just uncomfortable with the crazy volatility.
Hmm.
But if you got paid, 8% along the way, how does that sound?
Right.
Okay. So they say growth-oriented income investors seeking Bitcoin exposure, but with yield protection. The yield protection is a guaranteed 8% rate.
Hmm.
Okay. So it's got an 8% dividend, not interest. So the interesting thing about this, Randy,
Oh.
is that it should be taxed as a qualified dividend, just like a stock dividend is,
Hmm.
meaning that it's taxed at capital gains rates
Okay.
versus income tax rates.
Okay. All right.
Okay, so if you hold these in a non-retirement account, that matters in terms of how it might be taxed.
Right. Right.
Okay, so they've positioned this so that it's about 6 times the yield on the S&P 500.
I see. All right.
Okay, so the yield on the S&P is,
Right.
1/6 of this.
Okay.
The other thing that they've done here is, and this is where the upside comes from, they have basically a perpetual option to convert the preferred stock into shares of the underlying company, which is MSTR strategy.
Right.
Okay, so you get your 8% dividend coupon every quarter. Okay, and then you have upside to MSTR. Why do you want upside to MSTR? Well, MSTR, as many people may know, is the world's largest corporate holder of Bitcoin. So if Bitcoin goes up, then MSTR stock should go up as well. And so therefore, you're tying your investment here sort of indirectly to the rise and fall of Bitcoin.
Got it. And so as that well, you're probably going to explain this. I should probably let you go for a while.
Okay. Now, when they first offered this, they offered it at $80 a share. So it was effectively yielding 10%.
Okay.
But the par value of these investments is 100 on all these, 100.
Mm-hmm.
So they offered this at a discount to entice investors to buy it.
Right.
And if you recall in that first chart where I showed the yield, that the yield came way down
Right.
and the security actually was priced at par for a while. So it's 8% dividend if the stock was priced at par.
Mm-hmm.
If it's more or less than that, then the yield could be higher or lower depending on where the price is.
Are they
Okay, but this,
regularly offering more of these, or is the only way to
yes.
buy it is on the market? Okay.
Yeah, they're regularly offering more. They have something called an ATM. It's actually kind of a great name. At the market offering, they can issue more of these at any time.
I see.
And actually, this is a way that they can do it. If the price kind of gets carried away and there's a ton of demand, they can sell more into the market and kind of manage the price a little bit.
Got it.
Okay. Um, so you can see here when after they first launched it, it went up 34%. They priced it so attractively.
Right.
People said this 10% yield is great, and they bid the price up, so it started to yield more like 8%. And actually, here as of the end of July 29th, it was 7.5% yield.
Mm-hmm.
Okay, so it even went above par for a while. Okay, all right. So who would be interested in this? Well, the company thinks that people that invest in the S&P 500 should be interested. Again, this is a way to get some growth, but some income along the way. So that appeals maybe to a regular stock investor.
Mm-hmm.
Also, NASDAQ 100. People that invest in commercial real estate. A lot of real estate does not cash flow at 8%. So this is appealing potentially for those investors.
Mm-hmm.
Okay. That might have a yield of 4%.
Sure.
And then they're saying that investors invest in hedge funds or Bitcoin directly or some of these Bitcoin exchange traded products. So, a pretty big market that they're going after here. And so far, they've issued about 1.3 billion of this. Okay.
Right.
And at this time, they put these slides together. It was yielding 7.5%.
Got it.
Okay. But if you want to know exactly what it's yielding at any time, the company has a website, strategy.com, and you can go and click on the security. Here's STRK.
Mm-hmm. Mm-hmm.
And when I did this, this was as of November 23rd. So it's a few days old. And by the time you air this, it might be even older than this.
Mm-hmm. Mm-hmm.
But at that time, the effective yield was 8.5%
Okay.
because it was trading under par.
Right.
Okay.
Yep.
It pays its dividends quarterly. So the next dividend is due at the end of September. Okay. So there's lots of good information on their website. It's in real time.
Okay. So my first question, I have to get this one out because I'll
Yeah.
forget. So per the example that you've already shown us, there's a tendency on the part of any investor to seek a certain yield if they're saving.
Yes.
And that's based, as you pointed out, on time, which is a risk,
Yes.
based on the riskiness of the investment itself, and it's based on, um, in fact, interestingly, I didn't do this on purpose, but I had just asked Grok to give me how you could calculate the value of 10-year bonds using other information, which typically I thought was mostly how many points above inflation the expectation is over the next 10 years, which Grok agreed with me. That is definitely projecting inflation over the next 10 years, and being 2 to 2.5% above that is where the 10-year bond is generally going to float. There was a couple of other methods that you could use to get to where sophisticated investors are trying to figure out the value of the 10-year bond. So why would these particular secured vehicles be any different in that regard? Wouldn't people still be looking for that same return, only maybe a little more because maybe they see it as riskier? How does that play?
Yeah, generally in the fixed income market, you price everything off of treasuries. Treasuries are perceived to be the risk-free asset.
Okay.
I would actually begin to challenge that notion.
Well, that's a whole other show.
Yeah, right. So that we could just leave that statement there. But normally, you would start with the risk-free asset and then figure out how much extra
Risk.
spread, how much extra risk that each security is.
Okay.
Okay. Now, in this case, again, you're getting that 8% dividend coupon on an annual basis right now, effectively yielding 8.5%. So let's call it 8.5%. If you bought it today, you're locking in that.
Right.
And then from there, you've got the upside potential. So it's a combination of sort of growth and income. Okay. Now the question is 8.5% enough to compensate for the extra risk that this security represents?
Right.
Now, that's going to depend on a number of things. One, it depends on your view of Bitcoin as an asset, right? So imagine if this was backed by gold.
Right.
Most people would probably say, that's awesome. You've got this collateral. Gold, I understand. Gold's been with us for 2,000 years, right? People value that, right? Now, here we're introducing a relatively new asset that a lot of people aren't as comfortable with. Now, there are a lot of people that have studied Bitcoin and they say it's actually better than gold. But if you're not at that point yet, then you might view this as being more risky. So that's kind of where that matters in terms of the value of the collateral and how much do you trust that?
Okay, so then the two things that come to mind right away that would impact my return would be, one is if the market in general pushes Bitcoin up,
Yes.
let's say let's just for fun say that Tom Lee is right and Bitcoin doubles, over the next few months.
Yeah.
What happens to the share price of of these different preferred securities if the value of the underlying product goes up,
That should help because then the value of the collateral is increasing.
right?
And in addition, Strike actually would also benefit in another way because the collateral is increasing, but also the equity value. See down here, it says equity component,
Okay.
34.8%.
Mm-hmm.
The equity component will continue to increase. And so then that conversion feature where you can take 10 shares of Strike and convert into 1 share of strategy stock would have more and more value.
So then the value of your share price in this case would go up,
Yes,
which would mean that the yield for the new folks that are buying it from you goes down.
that's right.
Okay. All right.
Yeah.
So the time to buy it is now. Anyway.
Well, if you have a favorable view
Right.
of Bitcoin
Right.
and you also want to get some income along the way, yeah, you can lock in this 8.5% yield right now.
Right. Right. Got it.
Yeah. Now, we just went through the most complicated one
Okay.
because this is a combination of sort of, income, and growth.
Mm-hmm.
The other three are more sort of traditional fixed income type investments.
Hmm.
So if people are starting to get lost, it's going to actually get easier rather than more difficult
Okay.
as we
All
go
right.
forward here.
Okay.
Okay, so this next one, this is what they call long duration senior credit. So it's for fixed income investors seeking a premium yield, so a higher yield,
Mm-hmm.
with enhanced payment protection. They don't want to take any risk. They want to be as protected as they can possibly be with the security.
Hmm.
Okay, this is the most senior security that this company issues. Company is called Strategy. Okay, so let's go through and understand what this is. This one has a 10% yield
Okay.
at par.
Okay.
And if they ever get into a situation where they cannot pay the dividend for any reason, then the yield goes up by 1%, goes to 11.
Okay.
And let's say the next quarter they miss another payment.
So every
Now it goes to
quarter.
12.
All right.
And it escalates all the way up to 18%. It gets very punitive for the company.
Right. Right.
Okay. They are highly encouraged here by this mechanism to pay. And also they if they miss a dividend, they have to catch it up eventually. Like they have to pay
Oh, really?
everything.
Okay.
Okay. So it's a cumulative payment.
Hmm.
All right. So the 10% plus the enhanced protection, it's the highest credit quality they issue, and then this escalation, 1% per missed payment up to 18% cap.
Okay. Okay. I got another question that I have to ask now. Where is STRF earning the money to be able to pay the dividends?
Let's answer that question at the very end, Randy.
Okay. All right. Okay.
Okay. Because it applies to all of them.
Okay.
Okay. So again, just to be clear, this is paying a 10%
Mm-hmm.
cash dividend. If it was priced at par, it can fluctuate up and down below par. Okay. So that's a nice high yield,
Mm-hmm.
and it's the most senior security that this company issues. So it is kind of designed to compete with long-term U.S. Treasuries,
Mm-hmm.
which is a $20 trillion market, agency mortgage-backed securities, which is about $9 trillion, U.S. Investment-grade corporate bonds,
Mm-hmm.
about $6 trillion, and then municipal bonds,
Hmm.
about $4 trillion. And they've issued just a mere 1 billion of this so far, 1.1 billion.
Right.
And here you can see sort of the rough yields for those. They're in the 3.5 to 5-ish range.
Mm-hmm. Mm-hmm.
And at the time they cut this was yielding 8.7%. So again, it's designed to be very appealing relative to some of the other fixed income investments out there.
Right.
Okay. And again, from the website, when I pulled this down, it was yielding 9%. It was the current effective yield.
So is the trade-off on this one, maybe you were going to say it, but it looked like you were done with it. Is the trade-off on this one that it's not convertible?
Correct.
Okay.
There is no upside other than the yield.
Mm-hmm.
But if people think that current 9% is so attractive and they start buying it, that yield could come down,
Mm-hmm.
which means the price of the security goes up.
It goes up. Right.
So if people think that this is really attractive and it attracts a lot of money, you could get some nice price appreciation. Yes.
Mm-hmm. Mm-hmm.
Vice versa, if people think that this 9% yield is not enough
Or too risky.
or too risky or whatever it is, right? Then the price will come down until enough people step in and say, okay, now I'm willing to buy at 10%.
Mm-hmm.
Yep. Okay. All right. The third one, STRD. It's exactly the same as STRF, except for two important things. Okay. They can not pay the dividend, and they don't have to catch that up again.
Okay.
Okay. But it's going to yield 10% or pay 10% at par.
Mm-hmm.
All right. But they can skip a dividend if they want to,
Okay.
and not have to make you whole.
Okay.
Now, as you can imagine, there would be some consequences to that,
Okay. Yeah.
right? You'd lose trust in the company and say, well, if you're just going to treat me like that, then this is too risky. This is like worse than a high yield bond,
Right.
right? But again, they're just trying to position these things for different types of investors. So this is designed to go after the high yield bond market, which has about 2 trillion.
Mm-hmm. Mm-hmm.
And then other types of high yield investments like closed-end funds, preferred stock ETFs, and even emerging market debt,
Hmm.
right? Which all yield between 6.5 and 7.5%. And this, at the time they did this, was yielding 11.8. Okay. Now, when I pulled this down, it was actually yielding now 12.6. It's actually the yield's actually gone up, prices come down.
When you say
So
when you say they can skip a dividend, can they skip 27 dividends?
they could.
Okay, all right.
In that case, the price of the security would drop, from the
Right,
current price of 79 down to 2,
right, right.
right? So there's potentially a massive risk in the
Right.
security if they don't pay.
Got it.
But think about the implications of this. Not only would this security drop, but the others would probably drop too, because other investors would say, oh my gosh, look how they're treating the STRD investors. What happens if they mistreat us and stop paying on ours?
And also, there must be rules around not paying. There must be rules around how they decide whether they do or don't pay.
I believe it's at their discretion.
It's at their discretion.
Yeah.
Wow. Okay.
Yeah. But again, it's a reputational
I
trust thing.
understand. No, I get it.
If you don't pay, then you're not going to have anybody willing to buy this at any price.
Right.
Right. So this is all about building trust with investors and doing as you say you're going to do and making sure that you can.
Hmm.
Okay. Okay. So that's that one. Now let's go to the fourth one. This one is the most recent one. It's called STRC, or Stretch for short.
Because
And yeah, it's short duration, so meaning very little interest rate risk, almost none,
right.
and it's high yield.
Okay.
Okay, so short duration investors seeking stable value with higher yield than money market funds.
Hmm. Hmm.
So this one pays a rate that can be changed each month.
Mm.
Okay. Now, when they initially brought this to market, it had a yield of 9% at par,
Mm.
but they priced it in the IPO so that it yielded 10.
Okay.
Okay.
Hmm.
And they've designed this in such a way that instead of like for STRF, where the dividend is fixed and
Hmm.
the price fluctuates,
Hmm. Hmm.
they've designed this for the price to be relatively fixed and for the dividend to fluctuate.
Hmm.
So kind of like money markets do, right? The money market rate can change
Right.
month to month, day to day, depending on what the Fed is doing and demand for, cash and that kind of thing. This
Hmm.
is kind of the same thing.
Mm.
Now, what they did in September was they raised the payment from 9 to 10%. Okay.
Hmm.
But what they can do in the future, I'm not sure if it should, yeah, they can reduce the rate, but there's some constraints on them as far as reducing the rate. They can increase the rate as much as they want.
Mm.
They went from 9 to 10.
Hmm.
But if they want to bring it down now that the Fed has cut rates, they can it's called a step down. They can bring it down 25 basis points plus any decline in the monthly SOFR rate. So let's say the Fed cuts by 25 basis points,
Hmm.
the SOFR rate goes down by 25,
And
then they could reduce this by a total of 50.
okay.
Okay, so they just increased it by 1, and if they bring it down next month, it would only be 0.5%.
Hmm. Hmm.
Okay, so there's some governors on how quickly they can cut the rates.
Got it.
Okay,
Hmm.
so um, again, this is the only one of the four that is designed to be much more price stable.
Right.
The other ones are designed to be income stable, and that's a
And,
very key distinction.
and you said short term. What is the term?
Well, they pay monthly,
Okay. They pay
right?
monthly. Okay.
They pay at an annual rate of 10%, but they make the payments every month. So again, it's like a replacement for money market funds,
I
bank
got it.
accounts,
I got it. Okay.
short-term T-bills, commercial paper, and even stable coins.
Hmm. Hmm.
And these are all yielding around 4, and this is yielding at this time, they did this chart, 9.5%. Now it's 10.
Right. Right. Right.
Okay, and here's the screenshot. Actually, 10.3 when I grabbed this for STRC on their website. Again, please go to the strategy website and see for yourself what the current rates are. Don't rely on this presentation for anything.
Right. Right.
Okay. But I just wanted to show everybody where they can find this. Okay. Here's kind of a summary of all 4 of them.
Okay.
Right. You've got all these other assets that people invest in, right? There's like 500 US Treasury bonds,
Hmm.
28 trillion,
Hmm.
yielding 4.1% with a duration or interest rate risk of 5.9 years.
Hmm. Hmm.
Okay, mortgage-backed securities. I don't know why it says 35. There should be probably 35,000 of those. 9.2 trillion, yielding 5%, duration of about 6 years. Okay, and et cetera. Okay. Now, the other thing that matters is collateral. When you buy a mortgage-backed security, how much underlying collateral is actually there to support the bond that you're buying? And it's about 1.3 times. So if you buy a 10,000, let's say $100,000 bond, there's $130,000 of collateral backing that bond.
Okay.
And that's considered to be standard in the mortgage market because home prices just don't move that much that becomes a problem. Okay.
Mhm. Yep.
And you can see for these other investments, it ranges from, 1.7 to 2.1. Okay. And then dividend paying stocks, it's usually higher.
Mhm. Mhm.
They've designed these investments to have a lot of collateral.
Right.
Now, to your earlier question about how do they make these payments? So what they're doing, Randy, is something that's very novel and quite interesting. Although when you first hear it, you may say, that sounds strange.
Okay.
Okay, so let's take our time and we'll go over this and make sure we understand.
Mhm.
Let me first use an example of something I think everybody will understand. Let's say I have the opportunity to borrow in Venezuelan currency, and I have the opportunity to buy in US dollars.
Okay.
Would you not borrow as much Venezuelan currency as you could and buy as much US denominated assets as you could because you know that the Venezuelan currency is going to depreciate because of its massive inflation and the misrunning of the economy? I think
Ye-
most people would say that's a pretty good bet.
Yes. Yes.
Okay. Maybe they turn things around. Maybe the currency goes up. There's a risk of that, but you're probably pretty confident that Venezuelan currency is just going to keep sinking.
And to make it more clear here, you borrow in the Venezuelan currency, which and then you pay back in Venezuelan currency, which has depreciated,
Yeah.
and therefore you pay back in something that's worth less
Yes.
or even worthless.
Or worthless, maybe. Now, good point. You have to make payments on a regular basis,
Right.
let's say every quarter. Ideally, you keep borrowing more Venezuelan currency to make the payments,
Okay.
right? Why sell your pristine asset, the
Yeah.
dollar,
Yeah. Yeah.
when you can just keep borrowing in Venezuelan money and
Right.
pay them back with that?
Is that what they've been doing in the Japan, that Japan thing that unwound a while back?
I'm not sure specifically, but this is
Yeah.
commonly done in many areas.
Right. Right. Right.
Okay, so what's strategy doing? They're borrowing in US dollars
Okay.
and they're buying Bitcoin.
Okay.
In the minds of Bitcoiners, the US dollar is like the Venezuelan currency, and
Okay.
Bitcoin is like the pristine asset.
Well, let's say that we can be confident for the most part that the US dollar is going to drop by 2% per year because that's the goal.
Well, it's more than that. It's not only the dollar dropping, but how much is the Bitcoin appreciating?
Yes, so I was just taking the one side.
Yeah,
So you got the
yeah,
2% that is the goal of the government.
yes.
Yet to
Right, good point.
And while sometimes we had a period of several years that wasn't true, over time it's almost always more than 2%.
Yeah.
So
And factor in debasement, you're looking at more like 7 to 8%
right.
from
Okay.
that standpoint.
Mhm.
So again, it's a pretty good bet over time
Right.
that relative to Bitcoin, the dollar is going to depreciate and Bitcoin is going to appreciate.
Right.
So generally what they try to do is keep or not borrowing in this case. This is not a debt instrument. Actually, they don't need to pay these off. These are preferred stocks.
Hmm. Hmm.
So they keep selling more preferred and offering the 10% rates, et cetera. And they use some of that money then to make the quarterly payment.
Hmm.
Okay. And that's going to work probably 99% of the time.
Okay.
What about the scenario where we have some kind of crisis and either the capital markets are locked up and closed and they can't can't raise any more money for any reason, or Bitcoin is going through some kind of down cycle that's horrible for some crazy reason, right? Somebody's figured out a way to hack part of the Bitcoin network or whatever it is,
Mhm.
right? And Bitcoin goes down. So the question is then, how low does Bitcoin have to go before they would have to sell some?
Mhm.
Like how much collateral do they have, right? And so I've done a calculation. Bitcoin would have to go down by over 88%
88%. Okay.
before the
Because of
company would
those,
run into any kind of issue.
because of those collateral items down below.
Yeah. Now, what you're not seeing here is this company has also issued some convertible bonds.
Mhm.
So we're factoring in that, and we're factoring in the dividend payments on these preferred stocks. So the 88% drop, some people would say, well, okay, but Bitcoin could drop 88%,
Yeah.
no problem. It's dropped more than that before. Well, that was early on in Bitcoin's life when it was like $100 million asset. Now it's 2 trillion.
But that is the risk. There
That
is a
is the risk.
there is a risk. That's the risk. Okay.
Now, if that happens though,
Yep.
that's supposing that the company just stands on the sidelines and does
Right. There's
nothing while
nothing.
this is going on,
Right.
right? This company in a week typically issues more securities than they have to pay out in dividends in a quarter.
Hmm.
So at the first sign of trouble, they could actually raise some capital and put that aside and say, this week we're not going to buy Bitcoin with this. We're just going to keep this here because we think that we might be going into a rough patch.
Right.
We're seeing bank failures. We're seeing this, that, and the other. We're going to go into more defensive position and not buy Bitcoin.
Right.
That would be like raising money in the Venezuelan currency and just holding it for a bit because, the currency actually may appreciate for some reason right now.
Mhm.
They have a new president, and we actually think the country may be on the rebound, right?
Are actually what maybe you would agree with is that we're coming into this AI period where robotics, a uh, uh, high amounts of productivity could actually result in the U.S. dollar being at zero or even negative, even uh, appreciating as opposed to depreciating.
It's possible.
Right.
It's possible, yeah. Although I do think that that kind of environment also probably leads to the money printer going burr. Um, while we may be enjoying, deflation and improved productivity, the government may not appreciate having all its debt being deflated. Therefore, they have to pay it back with more dollars. So I'm not sure, Randy, how that will all work out.
But that would be, but again, we're looking at so right as crazy as it may sound, I have been contemplating what would happen if the US real estate market dropped in half, like the Japanese real estate market dropped in half because of population decrease. Now,
Yeah,
I know that this is a 25-year problem. It's not a 5-year problem, but it's something as I'm planning in this particular case, as I'm planning my children's inheritance, and I have a substantial amount in real estate. Is this a long enough horizon to where they'll be out of the real estate before there's a problem? So the same thing could be true here if we're really, for those who are believing that could be coming into a very significant increase in productivity that might dramatically reduce the cost of things to zero. And again, not crazily, because
yeah,
we've got telephones,
yep.
telephone calls are currently zero compared to costing a lot of money when I was a kid. You got, it's something to think about. It's something to put into the overall equation. It doesn't mean you shouldn't do this. It just means that's one more thing to
Yeah.
contemplate.
There are so many different complexities to this
Yes.
because in your scenario with real estate dropping, look at this agency mortgage-backed security market
Yeah. Yeah.
that has 1.3 times collateral.
Right.
You
Yep.
drop the collateral value in half, and suddenly you're under collateralized here.
And we've seen that in the United States a couple of times in
Yeah,
my lifetime. Yeah.
yeah. And again, the government can come in and bail people out and all that kind of stuff, but still, in the meantime, there's destruction when that
Yeah.
happens,
Oh, yeah.
right? And you may or may not be made whole if you were an investor in these bonds,
Hmm.
right? Yielding 5%, and you may decide that these other yields are more attractive, for
Right.
example,
Right.
because the collateral actually is not only more, but more pristine than just holding real estate.
Exactly. Hmm.
Right. Now,
Now,
the other thing that strategy can do is as things are going down, they can actually offer these securities at higher rates if they have to.
Exactly. Now, the other thing, if I remember correctly, isn't a strategy planning to also get into the banking business where they'll be lending money out to some kinds of borrowers?
Potentially, although I doubt it.
Well, you don't think they'll do it? Okay.
No, I think the risk with that is if you lend out your collateral, it might not come back,
Yeah, of course, that's always true.
right? And so in that case of Bitcoin, the people running the company feel that that's the most pristine thing that they can have, and they don't really want to let it go.
I see. Okay.
Now,
Yeah.
it might be a situation though where you could give your Bitcoin to Strategy and
Hmm.
they hold it for you, and then you could go get a mortgage with that as collateral
Right. Right.
or something like that, borrow against it.
Mhm.
In that case, that may be possible.
Okay.
So we'll have to see how that develops. But ultimately, what's going to happen is as the company, maybe this is a good segue to this chart, as the company acquires more Bitcoin,
Hmm.
right? And what I'm showing here is the outstanding preferreds is about 6.3 billion against a total addressable fixed income market that they're going after of about 200 trillion. So
Hmm.
they're 0.003% of the way there. There's a lot of upside in terms of, eating into some of these fixed income markets and
Sure.
also equities and real estate with these securities.
Hmm. Hmm.
So as they attract capital, as this percentage goes up over time, and maybe it only gets to 0.001 or maybe 1%, 0.001% instead of 0.003, triples. Um, as they collect that money, they're typically buying Bitcoin with it, and they're building up this massive reserve that today is worth about $72 billion.
Right.
It's not inconceivable to think that one day they might have a reserve that's a trillion or more.
Right.
And the largest reserve of a treasury reserve of any company in the world right now is Berkshire Hathaway at
Right.
about 330 billion. But it's not inconceivable that Strategy has something that's, 3 or 10 times more than that
Hmm. Hmm. Hmm.
over time.
Right. Right.
And when you get to that kind of status, Randy, you kind of become the lender of last resort for everybody.
Yeah, really. So it's so almost impossible to wrap your head around because there, as you said, there's so many moving parts to this. You've got the value of Bitcoin, whether Bitcoin retains its value, but its value goes down. You just explained how if the value of Bitcoin came down, it'd have to come down a lot, and that there would be mitigating things to do along the way. But the maybe the one thing that people have the hardest time understanding is bit strategy borrows money from me, or not borrows, they sell me a security in this case,
Yes.
and I get the security, I give them money, they go out and buy more Bitcoin, and so it as the inclination of the human brain is to say, boy, that sounds like a Ponzi scheme. What if people stop buying the securities?
Well, again, it comes down to that Venezuela versus US argument. So if you believe that you are borrowing in the depreciating asset
Mhm.
and you are turning around, taking that money and buying the appreciating asset,
Mhm.
then you would do that all day long.
Right. But I'm just saying, what if for whatever reason, maybe even an unknown reason, maybe it's just a psychological reason,
Yeah.
the value of Bitcoin does go down 50%, and basically nobody wants to buy STRKs or SDRFs or SDRDs. Is that where the first line of defense is not to pay dividends? But then if you don't pay the dividends, doesn't that maybe start a flywheel going?
Yeah. On the surface of it, the first line of defense is to not pay the dividends, but that would be a mortal blow to the company because you would destroy all trust.
Right, right.
So they would want to do everything in their power to find the capital, including selling Bitcoin if they had to. And as long as Bitcoin doesn't go down more than 88%,
Mhm.
selling Bitcoin is fine because you have more than enough collateral to satisfy any of
Right,
these payments.
right.
Right. But the objective here is to be so well collateralized that normal fluctuations in Bitcoin do not matter.
Mhm.
And from time to time, the capital markets may be closed. From time to time, people may not be interested in buying these preferreds,
Mhm.
right? Because they're scared or there's some kind of crisis.
Mhm.
But over time, the idea is that they'll continue to sell these because they're fundamentally more attractive than the alternatives that are out there,
Mhm. Mhm. Mhm.
right?
Now if I may be calling this a little bit wrong, but it seems in a way that this is similar to some of these ETFs that are buying stock. For instance, I have a very small investment in TSL, TSL, I forget. There's another letter.
TSLY, the option.
TSLY, TSLY. I have
Yeah.
a very small investment in TSLY, and
Yeah.
it pays a very nice dividend, bigger than 10%. I mean,
So those are totally different.
oh, they are totally different. Okay.
Yeah, the income source for those kinds of investments is option volatility,
Okay.
or the volatility of Tesla captured by the option market.
Yeah.
Right. You can create an income source from Tesla's volatility by, for example, selling calls
Right.
or selling puts, and you can collect income from that.
Right.
That's very different than what we're
I see.
talking about here.
Okay. All right.
Yep.
Okay. So that's based on their ability to manage those funds in such a way that they have a dividend to pay. Okay.
Yep. All they're really doing here is selling you a security, promising to pay you 10%,
Yes.
taking the money from that and buying Bitcoin, which they think is the superior asset in the world,
Right.
and just saying that over time that will appreciate as it has in the last 15 years,
Mm.
right? Um, it will appreciate over time, and the company will get to enjoy the majority of that appreciation. But along the way, they're paying you 10% a year.
Right.
And it sounds like a lot, but as long as Bitcoin appreciates by more than 10%, which it handily has done,
Right.
then the company is going to get most of that return.
Right.
Michael Saylor has said that based on their calculations, they believe over time they'll capture 80 to 90% of the return on every dollar that they issue in securities.
Mm,
Right. Now, of course, there'll be times when it's more and times when it's less,
for sure.
but just over time. And again, the important thing is they design this in such a way that most of the time they've got so much collateral, they can handle pretty much anything that's thrown at them.
Right.
Okay. Now, right now, they have about $8 billion in convertible bonds that they've issued.
Mm,
And they've learned their lesson that actually that was a bad way of raising money because they have to pay that back.
okay. Yeah.
Now, the interest rate on the convertibles were attractive. Some of them are at 0% rates, Randy,
Mm,
right? They've been the best performing convertible bonds on the market for a couple of
right.
years.
Right.
And the people that ran convertible bond funds wanted them. And so they, asked the company, please issue more, please issue
Yeah. Yeah.
more.
Yeah. Yeah.
But now they're going to have to potentially, in a worst case scenario, if Bitcoin goes down, they'd have to actually pay those bondholders back.
Right.
Now, in a normal situation, in an ideal situation, those bonds will just convert to stock and everything's fine.
Sure.
But it's a bit of an overhang right now because potentially, if Bitcoin dropped, they would have to pay those bonds back.
Yes. Yes.
But once that's gone, they'll have no debt.
Okay.
They'll just have equity. They'll have the common equity and they'll have these preferreds.
Hmm.
And so as they raise money, none of it ever needs to be paid back.
Yeah. Yeah.
It's
Yeah.
it's an
Yeah.
amazing really innovation in terms of, you know, bridging two different assets and providing a service to people that are looking for income
Sure. Sure.
along the way as you're building up your base of this asset that's really desirable.
Yeah, that is it's quite a story, Cern. That is very, very interesting. And I think also a lot of people that look at Bitcoin, their concern is even managing it. That they're afraid of the
Yeah.
wallet, they're afraid of losing their number, their ability to, they talk about people losing it, not being able to get into their Bitcoin, not knowing what to do with it, how to trade it, how to get in and out of it. So I think people that are interested in Bitcoin that might be looking for a simple method for playing the game. This might be a much simpler way.
Yeah, that's a good point because I think a lot of people are worried about the complexity of Bitcoin. And as great as it is to be your own custodian of your assets, it comes with risks.
Yeah.
Think about, for example, if you bought gold and holding that yourself,
Yeah, the actual gold.
actual gold, right? You not only have to find a safe place to store it, but you have to protect it, make sure no one else gets it. And then you also have to remember where it is,
Yeah, 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 exactly.
right? So over
And the
time,
combination,
if
the
you buried
combination.
the gold in the backyard 20 years ago, you might forget exactly where you put it.
You see, it was three steps over here and then
Yeah.
four to the right. No, was it four and then three?
Right, or whatever it is. So there's
Yeah,
there's risks to self-custody, and same thing with Bitcoin. There's actually a lot of Bitcoin that's been lost.
right.
And the nice thing about this is they're offering these securities to people, in this case, looking for income,
Hmm.
with the exception of STRK, both income and growth.
Right,
And you get to do it just within your normal investment brokerage account
right.
that you've been used to dealing with, and you understand how that works, and you understand that there's SPIC insurance. And
Hmm.
for many of these companies, if you have more than the SPIC amount, they've got insurance that they buy.
Right.
In the case of Schwab, I think each account's protected up to $100 million,
Okay.
right? So people are used to operating in that world.
Right.
And now here's strategy coming along and saying, okay, we can bridge this even further and get you exposure to this new asset that's been incredible
Hmm.
without you having to figure the complexity of all that out.
Sure, sure, sure. Yeah,
And I
yeah.
think that's really appealing for a lot of people.
Hmm.
Now, for true Bitcoiners, that they're kind of, you know, they're not happy about this because they think everybody should go to the self-custody world, right?
Right, right, right.
Decentralize everything. And and
Yes, yes.
and maybe ultimately we do long term.
Yeah, yeah.
But this is actually a pretty nice bridge in the meantime
Hmm.
for many people.
Again, yeah, I would think there would be, I would think there would be a big market for this. That would be my guess. Yeah.
It was interesting. This STRC um, was the last one that they issued, and you can see here that they issued 2.8 billion.
Hmm.
Um, they were surprised what happened with this one
Hmm.
because normally institutional demand is the majority,
Right.
and on this one, retail was a significant uptick.
Oh.
So they actually I think they partnered with Fidelity on the retail side, and Fidelity made it available to their retail customers,
Mhm.
and they saw a significant interest in that. So that was kind of one of their aha moments. It's like we're onto something here.
Yeah.
If individual investors know this or understand this and are willing to put their money in it right on day one.
Mhm. Mhm. Yeah.
So I think this will actually do quite well.
Very, very interesting.
Yeah, and the other thing too that's important to mention, Randy, is liquidity.
Hmm.
With many bond investments, particularly preferred stock, they're not very liquid.
Hmm. Hmm.
And they're really trying to make a market where there's plenty of liquidity in any given day
Got it.
to be able to
And so far as
exit.
that, and so far
Yeah.
as that true.
So far, it's true. Yeah, actually, there's a chart here shows the dollar amount of liquidity, and it right now it's settled down to about 100 million a day between the four of them.
Okay.
Okay, and then another way to look at it is the percent of the market cap traded every day. It's around 2% for each one.
Okay.
So pretty liquid,
Hmm. Hmm.
particularly if you compared it to other preferred securities, which would be like way down here.
For sure.
Some of those are like by invitation only kind of
Mhm.
things. Yeah. Anyway, there's a lot more we could discuss about that, but I just wanted to give everybody a taste
Yeah.
as to a very innovative um, income investment
Hmm.
investments. Not investment advice. Again, I didn't put my disclaimer up, but please do your own
Yeah. Oh
research.
my goodness.
Please talk to your own advisors. But I think it is something for people to be aware of,
Huh?
particularly if you are in need of generating any income. It's something that might be worthwhile looking at for a part of your portfolio.
Yeah. Yeah. Very, very interesting. I had no idea. So I was right at the beginning. I was clueless. Uh, I mean, I really was. I vaguely knew that strategy was looking at other avenues, like, for instance, lending money. I think I knew that they had done what you're talking about, but I had no idea really how it worked. So that was quite illuminating, and hopefully it was for folks out there. Let us know in the comments below whether that was worthwhile and useful.
Yeah,
And
and if you have any questions, again, I would encourage people to check out the strategy website. And I believe all of the presentations, there were videos that they did when they announced these. I think they're still available on the site. Those are worth checking out. But there's quite a bit of information on strategy.com.
Okay. All right.
Um, but as they say, Randy, now you know.
Now you know, and see, now you also know why if you've got, money laying around someplace and you're not happy with the person that's giving you your strategy, that sometimes you might want to call, and I never know which way to point. So call Cern. And you get there by going to your website, uh,
That's the best place to reach out to us. It's brilliantadvice.net is the
brilliant
best place
advice.
to reach
I mean, it
out. Yeah.
makes sense that it's brilliant advice. I mean, it rolls right off your tongue when you're looking, you know,
Yeah, it was funny. When we went to register the firm, I wasn't sure whether the regulator would approve it. But we took great pain to tell them that it was brilliant as in bright,
yes, yes.
right, rather than smart or intelligent. But they
I've
didn't have
always
any issue with it at all. That
I've
wasn't a problem.
I've always said that my confidence comes from the fact that I always knew I was brilliant because my parents called me son.
There you go.
There you go. And if that's actually a joke that's on the caves. You can find it in Mesopotamia on some of the caves writings. That's how old that joke is. CERN, it's great. Thank you very much for that. And I'll be interested to hear what people have to say about that one.
Thanks, Randy.
All right, to all of you out there, as always, it's been great talking to you.